Alright guys, hope you watched my last video on debit spreads, the bull call spread and bear put spread. This one's going to be a little bit different. We're going to show you how to go long in equity via selling put spreads, or go short in equity selling call spreads or bear call spreads, bull put spread and bear call spread. So we'll do the bull put spread first if my computer unfreezes. Great. Give me 1 minute. Good old TOS always freezing up. There we go. Okay. So, say you're bullish. Let's look at the chart for GDX. Actually, we'll do something a little bit different. We'll go JNJ since I know they got a little JN. Sorry guys, I type really fast. JNJ since they got kind of beat up from earnings. Alright, you can see the 50 MAs right there. RSI is kind of in the middle now. MACDs might cross, but this is a blue chip stock, so I don't think it's going to, go all the way back to right here. I really don't think so. J&J is a good stock. I mean, sure, back here, the next line of support's 137. Could go there. I don't think it will, but we'll see. So we're going to go, say you think J&J is going to hold the 50 MA right here. That's my 50 days simple moving average. All right, you can see, drop 10 bucks, 8 bucks, 7 bucks, whatever. So it's sitting basically right above the 140, 125. Yeah, right above the 50 MA. So we're gonna go to J&J on the options chain. So your Ultra J&J, they make a bunch of medical products and stuff like that. So say in the next, I don't know, 52, we'll do March because monthly usually have better liquidity. Now, you think J&J is going to stay above, let's say 140. All right. So 140, you want to sell the 140. All right, and then you buy the 135 as protection, and we'll do 145 as a credit. We'll do 140 as a credit. Say you want 140 as a credit. Now, the max profit is going to be 140, the initial credit. Now you can close early. You can close at 0.01. You can close if it blows past down the strike. You always want to have a plan when you trade. So you think J&J is going to stay above 140 by March 16th, 2018, which is in 52 days from today. I think 51 after midnight hits. So 140, you sell the 140 because you think it's going to stay above 140 right here, which I think it will. So go back to the trade tab. All right, so that's your max profit right there. You can't get any more than that, but you're selling. So time decay is on your side, which is theta. Now it's burning roughly $2 a day, I believe, in time decay. $2 or 2 cents. 2 times 100, $2. So then, set your order type limit, blah, blah, blah. So hit confirm and send if this is what you want to do. So your max loss is 360, which is the width of the spread, 500, minus 140 equals 360. And see, your max profit is 140. So you get to keep this credit minus commission, which mine are $1 a leg. So yeah, so it affects drop your buying power. You do need a margin account to do this, but that means you're bullish J&J and you think it's going to stay above 140 by March 16, 2018. So obviously each option contract represents 100 shares. So how you get to the credit of 140 is 255 of 140. 255 minus 95 equals 140, or roughly around there. So that's how the bear put spread works. Now we're going to go over to the Analyze tab. We'll go to J&J, add simulated trades, March 18th. Oh, you know what? I lied. Over here, it was you sell this for $239 and you add 105, and then you get 130 somewhere in here, depending on what the market makers are giving. Obviously, right now the spreads are a little wide, so my mistake. Back to the Analyze tab over here, and then we'll go to this is called a vertical because yeah. So this is your initial credit, 140. You get your credit at 140, and there's break-evens, but I can't remember how to put them on this chart. But yeah, you see profit and loss. So, yep, I hope you guys understood that. 140, 360, max loss. 500 minus 140 equals 360. Max with a spread minus initial credit equals your max loss. Now, if it falls below 140 and keeps falling to, let's say, 130, you probably want to close that. But if you're showing a max loss on your options platform that is greater than the max loss, don't close it. Just hold it till expiration. If you're so deep and you can't roll for a credit, I'll explain rolling in another video. So that's a bull put spread, bear call spread. So let's do UVXY because it's always going down except for today. So March 18th, this will likely reverse split pretty soon. So let's say, so we'll sell a 15 strike call. All right, so you sell a 15 strike call. Oops, did that wrong. So let's sell a 13 strike call. Actually, this will be lower. So let's sell for simplicity's sake, let's sell a 12 strike call. Sell. So you're going to sell a call, and we're going to put it at 130. Put our offer at 130. And then we're also going to buy a 15 strike call. So this is called a bear call spread. So you get a 130. Oh, that's not right. You get a 130 credit, or a let's aim for 30-cent credit, which the premiums aren't that great. I wouldn't do bear call spreads on UVXY, but since it always goes down, I figured it'd be a good example. So 3-point spread. Hit confirm and send. Now, with the spread, 3 minus 30 is 270. So initial credit, so with a spread, 3 minus 30, which is your credit, less commissions, which equals 28. Your max loss is 272 after commission. So you want this to go down. Now, if this expires worthless at expiration, you will get to receive that full credit. And if you hold it at expiration, there's no commissions if you just let it expire worthless. So if it's going to expire worthless, unless there's a nuclear war coming or, news, whatever, just let it expire worthless and you won't have to pay commission. You only have to pay commission on the opening. TD Ameritrade and TOS, they let you close the short side, so the call you sold for free under $5 cents. So we're going to go back over to our risk analysis. UVXY, March 18th. I sold a 12, bought a 15, so 28 or 30. Alright, that wasn't how I wanted to show it, but okay. Alright, this one's not working as well as I thought it was going to be, but you get the picture. Stays, UVXY stays below 12. You'll get the full reset credit of 30 cents. Well, 28 less commissions. Or 30 less commissions, sorry. But that is a bear call spread and a bull put spread.